Hello, everyone, and welcome to The Buck Stops Here. I am Catherine Murray. Well, we continue to watch these markets show a little bit of volatility, but importantly, we do see investors continue to buy the dips. The question, of course, is that the right strategy? To help us answer that, we have a very special guest today, Vincent Deluard. He's a director of global market strategy at StoneX Group. Vincent, great to be with you today to provide some insights in terms of the current environment. So welcome. Thank you.
It's better to be here.
Thank you. Vincent, let's kind of start with your top-down view right now. Where do you stand in terms of whether or not this market will continue this upward trajectory that really feels like a very strong bull market? Do you believe that this will be the case?
Yeah, it's a very topical question. As I'm in a bit of a pickle here, where I've been, I think, mostly correct on the view that the economy is stronger than people think. We are in this kind of new era of higher nominal growth, cancellation of recession, and all that kind of supports this. I think what you were hinting about the buying the dip mentality, right? It's like every dip needs to be bought, because if you don't have recession and you have a Fed that's easing, usually dips are very short and you want to buy them. At the same time, I think, I feel this nervousness that everybody feels, that we move too quick, too fast. We have these trade tensions that are not solved. We don't see it because the government shut down, but I'm pretty sure the inflation data would not be too good. So the way I would frame it is I think we are at a pretty high risk of a correction. And if I were to guess, I think it kind of has to happen in October, early November at the latest, just because after that we get seasonality, we get the one big beautiful bill. I feel that correction could be quite severe because of how fluffy and how exuberant sentiment has been. But yeah, if you ask me for longer term, I would actually buy the dip. I think that mentality has been correct, and mostly reflects the fact that we haven't had a recession pretty much since 2009, and it seems that the economy is kind of structurally more resilient. So I am not in the camp that these valuations are completely insane. Clearly, there are pockets of ebullience and bubble-like things that we see, but as a whole for the market, it's quite possible that the bull is not over yet.
Vincent, I'm curious, what are the one or two key economic indicators that you look at that gives you confidence that the U.S. economy is in fact very strong? Because as you know, we all know on Wall Street that if you can always make a bear case and you can always make a bull case, but clearly you have been right in this outlook. So what's key and critical to you?
So I'm obsessed with a somewhat obscure report called the Daily Treasury Statement, which is a late 20th century style report the government puts on its website, and you can see the movements of cash in and out of the Treasury General Account. So you can see the money coming in, the money coming out. And specifically, I love to look at tax collections because even before we had all these issues about the politicization of statistics and the government shutdown, I always felt that the way we go at estimating numbers in the US is insane, right? I mean, it's asking, calling people, hey, do you have a job today? I mean, it's kind of ridiculous.
Right.
Instead, if we look at tax collections, and I mean, there's a lot of quirks around it, but if you understand how they work, when people pay, what type of income is covered, you have an idea of income. And at the end of the day, we care more about income than we care about jobs, right? I mean, we live in a nominal economy, and that's extremely strong. I mean, that's been strong, really. I mean, it really took off since COVID. In 2021, 2022, we had like this 15-20% growth in income tax collection. Now that slowed a bit, but it's still kind of high 9, high 10%. And historically, no recession has started when we've had such strong growth in income collection. Now, that doesn't mean anything about the distribution of that income or whether, it's jobs are plentiful or not. But in terms of the ability of the economy to produce output, it's still very strong.
That's fascinating. It's essentially, it's not really just even looking at the money supply. It's looking at perhaps how much money is in people's pockets. As you say, it's not it doesn't maybe give you more detail in terms of who has that money, but that's pretty fascinating. We've just got 9 seconds to go, but what's that report called again?
The day treasury statement, it's just on the Treasury's website.
Okay. Okay, we'll take a quick break. We'll be right back.